Hello and welcome. It's a Monday, smarthelping.com live financial modeling here. Let's send out the link to Twitter, and we're going to get into a food truck model today. Sound and audio look good. So this is going to be an annual only model. It's one of the first like 3 templates I've ever built. So a lot of updates coming. Now luckily I do have the mining model, which was also annual only that I also did all these upgrades to with the income statement, balance sheet, cash flow. So we'll be doing a lot of that today, but let's do a quick review of what's been going on. So last week was pretty awesome. Normally I only do I try to do a new template every 2 weeks. But I did one 2 weeks ago and last week. And last week I did this really cool unit-based real estate rental acquisition model where, you can plan out an acquisition of like a building with a certain amount of units, like up to 10, and they can all have different rent rolls, and there's all kinds of nice logic here, monthly, annual summaries, and it's mainly a cash flow planner, but super useful. It's got entry assumptions, acquisition, exit assumptions, and then operating assumptions as well. And all the costs are based on cost per unit per month, except for real estate taxes is like the whole building just has one amount. And then there's increases built into that, all configurable. So really cool. So that was done last week. I was happy about that. You can check it out. It's only 45 bucks. Also, remember uh, to support me, you can check out smarthelping.com. Today, the industry specific model is what we're doing, but feel free to browse. There's all kinds of templates here for all kinds of uses, HR, accounting. The one today is, like I said, it's like our 4th template we ever built in the industry specific template bundle, all the way back in, I think, either late 17 or 2018. But yeah, you can check out financial models. You can buy in bulk as well if you want more than one. I've got color code keys here for different levels, or you can just purchase every template I've ever built for $9.99. I've got well over 100. There's about 130, 135 unique templates. A lot of real estate stuff, a lot of joint venture stuff that's very unique and valuable. A lot of SaaS stuff. I've done so much SaaS work. All these templates are very good. And almost all of them have been upgraded with 3 statement modeling. Accounting tools, inventory tools. This is a new bundle. So yeah, check it out. And we're going to get into this upgrade now. So I don't actually know what's going to stay or go yet. So let's go ahead and color code all this stuff. So I want a lighter yellow, I want royal blue text, and generally what I'll do is format everything. We'll bring in the unique logic, bring in these statements, and then I'll see if there's any other upgrades that really need to be done here. Oh. So it's just got a 10-year cash flow summary, which the simpleness of this is actually kind of nice. I just did cost based on a percentage of revenue for food, labor, and other startup costs, financing. So it's pretty straightforward. I don't even know. Did I do an IRR? Yeah, I did a 10-year cash flow C33. Yes. So this is the cash flow of the project itself. And then you can put in some cash amount here to get a essentially cash balance over time. And then that's the summary of that. So that's kind of cool. We got our debt schedule in here. Still grid line showing this. It really shows you how old the template is. Let's update this to be dynamic. Payment year divided by 12. Okay. So if I did on this financing, say 6 payments a year. 1, 2, 3, 4, 5. Oh, nope. Did I do it the wrong way? Yes, I did. It's got to be 12 in front. So food trucks are real prevalent around. You'll see them all over the place. And it's not like I mean, you could definitely, so this model is great for scaling. You can see we've got assumptions for up to 10 years, and you can do ranges where you can adjust the sales per day. The thing is, you'd have to put the costs. Okay, so one of the big upgrades is we're going to be putting in um, the food truck itself and equipment. All that will go into a capex, so it's not going to go here. This could be like legal fees or something. This is fine. Initial product inventory. I think a food truck's not really gonna like they're gonna be month to month, so that month one cost of goods sold right here is gonna cover that, and it's really gonna be you're not gonna keep food over time like for months and months, so that's not really relevant. So we don't need really initial product inventory. Uh, it's just you're gonna have to buy what you need for the first month. And so that cash flow will just happen right here in the cost of goods sold for, and it's on an annual basis anyway, so we're not even getting into the monthly granulation, so it's no big deal. Uh, this is good. Permit website. Pots and pans. Yeah, that's fine. And depreciation, the reason depreciation exists is for things that you're going to use up in, it's going to take longer than a year. Anything that you use within 1 year, it's just you can expense it because you pay taxes on an annual basis. It's an expense for that year because you've used it all in that year. So things like initial product inventory are not depreciated. Pots and pans probably not depreciated because you're probably replacing those. So that's fine to put in here and expense out. Put a total in here. I really don't see actually it. We're gonna have a lot of updated. Let's see. Like we're gonna have an executive summary, just kind of cash flow analysis. So these will all be new things that are going to be added. The returns thing, it's got something like that. Um, we're obviously adding financial statements. Did I add I don't think I did an exit value on here. So that's something we can add that's pretty significant. We're also going to update the whole. So this is the assumptions. This is going to become like the revenue assumptions because the global control tab's got to look like this. So that's going to be a pretty big update. Okay. Well, to make this work now, I'm going to need to add all the tabs that I'm importing so that I can do the find and replace. So global control is just going to be a new tab. Assumptions is now going to be revenue. We're going to have to put these in the startup cost tab. We'll add terminal value logic, probably on a multiple of annual EBITDA. income statement, cash flow, balance sheet, income statement, annual, balance sheet, annual, cash flow statement, annual. Definitely going to have a cap table and cap. Oh, that's another big upgrade. We're going to add a cap table if required. If it's just a one owner, that's fine too. You can put your initial investments in there, and the model will solve for the equity requirement, which will be any burn. If you think there's going to be burn in any of the operational years, plus the startup cost is essentially an investment required, and then less any debt that you take on. Cap table, capex. And remember, so joint ventures can be done all kinds of ways. I've got a lot of advanced waterfalls here that look at uh, IRR hurdles and preferred equity. So those can be applied to any kind of business, not just like real estate or oil and gas. Those are completely fine to be used in general businesses as well. Um, the basic cap table I put in here is just a straight up percentage. You've got any insiders, their equity contribution, any outside investors, their equity contribution, and the percentage of profits that each gets. And that's basically it. But if you have annual cash requirement, distribution contribution, which we will have in this, um, you can just plug that in at the top of any cash flow waterfall I've done here and it will work. Alrighty. What else do we got to put? Cap table, capex, startup cost, terminal value. Got all that. Validation. Let's see. Do we have a validation tab in here? Yep. Validation one. And the reason why we have to do all these tabs is when I import the data, I need to do a find and replace, and I don't want it to have errors. And that means you need all the tab names in from the source import, as well as spaces in between all the tab names that are being going to be referenced. This is not referenced, so we want distribution one, executive summary. So this will be the annual detail. The color down here is fine. Keep that. We don't need an instruction tab. I'll do an entire video overview to post it on here that'll explain everything. So that's out of there. This is honestly the percentage of finance of the startup costs. Usually I put this on the main global control tab. So let's just clear this out. And then the actual, so this is going to be called debt schedule. And these assumptions will be entered here manually. Except for this top one we'll reference. Okay, I think we're good to import. Global control, annual detail, that's... All right, let's import this. So we got global control. call this Food Truck Co. All the rest of this is fine for now. We've got CapEx schedule for depreciation. I'll save that. Put that in here. All these light yellow tabs will be input or have inputs on them. This is not input. This is at the end. Trying to make it look uniform and professional. Okay, we got that in. We'll have to do formatting after we import all this and do the find and replace. We only need 10 years. 1, 2, 3, 4, 5. Okay, and income state. Why is this a reference error? Global control. Okay, let's bring that over. Now, is this assumed? Let me see. Do I have a dynamic exit month in here? Yeah, I do. Okay, good. So there's income statement, balance sheet, and cash flow. So that will flow from mostly the annual detail, CapEx, cap table. That's good, good. I might update some of this logic in the revenue. I don't know, maybe. Last week we did what did we do last week? What did we do? And I did a huge update on it too. So last week was, oh, the automated kiosk. Yeah, I completely redid the revenue. That was a really good one. Based on capacity. So that was a great thing last week. Okay. I think we've got everything we need from this. Um, we'll format first, and then we'll start doing logic. So let's get this looking good. I'll get our column width to 15. Same with this. Now what we can do for this building is actually this would be the actual food truck. And I guess you actually can make it dynamic scale, like you can scale out multiple food trucks over time. You would just put the cost to buy it, or however you're doing it, right here. And then let's see, global control. So we're assuming all the startup costs happen in the same period, though. I don't know if I really want to make that dynamic and mess with the logic. Because this logic here with the capex was really difficult. I remember to do on the annual only. So, but you can do multiple trucks at the start. You could do like one. These don't have to be, uh, equipment. This could be equipment, another food truck, whatever X, Y, and Z stuff. Um, whatever you need here, you could put in, and the cost of it and the useful life. So I could do food truck 2, food truck 3, um, equipment that you're going to put in the food truck to cook, equipment item 2, etc. So it might look something like that. And let's say, these are 200,000. I don't know how much they are. You just put them in, whatever it is. This is just for a depreciation calc and capex spend at the beginning. Okay. And the useful life on that, well, car is I think 7. So equipment, probably 5. It could be 5 to 7 as well. And then here, so for the first one, you could put the value at sale, but then all the rest of these will just be based on the terminal value, the portion of the exit value applied to fixed assets versus extraordinary income. It'll just flow into here. Um, we're gonna try and do our find and replace. Hopefully, we've got a nice import. Okay, so this is the magic trick here that makes these pretty easy to do. So we want to replace mining 3.0 with nothing. Whole workbook. Oh, shoot. Oh, wait, what did I do here? Okay. Mining, replace all. Are we kidding? What's going on here? Oh, no, no, no. Right, so I want to keep this. You don't want that in there. Oh, nope, did not work. So we got hung up. Let's see, where did we get hung up? Terminal value, annual detail, cap table. Balance sheet, annual detail, executive summaries in there, distributions 1. Well, we got hung up somewhere. Let's get, while we're at it here, let's just paste these in. You don't have to have this logic in, but I might as well, because these are all going to be sourced from here anyway. Trying to look for a reference error. Ah, why didn't this update? So this is all fine. But here we stopped. So somewhere between, let's see, global control. So this all updated, but why did we stop here? Ah, wait. Is it something with this? Returns. Returns tab. Okay, I have return summary. So, we can just put this as returns. We'll have to update the formula later. That'd be it. Okay, now I think we do the rest of this. Perfect. Okay, now we're good. So all the logic here is updated to work on this tab. Let's do finish our formatting. And then we'll think about if we want to change the revenue logic or not. Just put a 20-year term. This is now going to be a manual entry. I will deal with that. Okay, so let's format. Let's format. Okay, so this is fine. This is fine. Good, good. Okay, format here. So start year is just this. Let's go 15. Get rid of the grid lines and freeze it up. Okay, looking good. Oh, this is already 15. Nice. Freeze this. Okay, these are fine. These are already 15. Now here will be reference instead. So this is going to be this date. All right, cash flow. Balance this. Good, good, good. These are all formatted now. What do I use the validation tab for on this? Oh, the years. Are these dates? Yes, they are. Okay. So I need to use a date. And this is going to be E-date, this, comma 12 for all our drop downs that we need. Alrighty. So the question is, so we can do dynamic and let's put a validation tab in for this. We do dynamic and year. What we're adding is an exit, potential for an exit. So 10 years, good terminal value, that's new. So you can potentially scale out, but all the costs are going to be up front here. There's no dynamic nature to the CapEx. Now, for the revenue projections, so for your 1 to 5 average daily sales, it's basically saying there's not much, the growth is not super um like we're not doing monthly growth in sales. It's just sales per day in this period range, in this range, up to 3 ranges. Now you could do like one to sorry, 1 to 3, 1 to 2 here, and then you have some growth in year 3, and then year 4 plus you kind of get to stabilized. But that's about as granular as you're gonna have it. So sales per day, average ticket, average order value. Let's just put average, and then working days per month. And then we have our cost of goods sold here. Put this on the global control. Actually, that'll be on the index tab whenever I do that. So we clear this out. And this kind of gets around any capacity constraints because you're actually just manually defining your daily sales, and they're not going to grow for into perpetuity. It's just this is your daily sales for this year range, etc., up to 3 different ranges. Alrighty. Well, it's pretty early. It's only 10:30, so I might be able to mess around with some of the logic here in the income statement and all this. See, so this is food sales. Should be based on this. This logic is already built. Then I've got cost of goods sold as food costs. We can put that in there. Then we have what are our main items? Labor and other. So we got that for labor. And then other and startup costs. Okay. And then based on all that logic, we have EBITDA. We want our debt to be referencing this. So this is going to be hard coded. We're assuming any debt is going to be taken on right at the first month, if there is any. And then I'll have to put this logic here to say if we equal the end year, then pay off any remaining balance. And this will just be this formula up here. Perfect, so that looks like it's working. Great. Perfect. Financing will be this. We honestly don't really need this annual detail, but I am pulling the logic for revenues. So that's why we're going to keep it. What are we doing here? Oh, this is adding startup costs and debt service. Debt service coverage ratio is pretty important, actually. This is EBITDA. This is cash flow. Say it's 25,000. Okay, and there'll be more stuff into here when we get to it. So back to the income statement. Interest. Why are we showing zeros here? If C5 is greater than terminal value D3, then 0. Otherwise, some debt schedule C. Yeah. So that's the interest calc. What's going on? Ah, I see. So what we need to do on this is year number. Which we can do by this minus year of this plus 1. So 1. Now if we did say 6 payments a year, okay, so year number is what we add for that. Get column M in there. Okay, that's fine. So column M is what we want to sum up. Or reference, not L, M. And there's our interest. Okay, depreciation. So this is all good. Looks good. This is all the logic that I have built in from the other model I did, and it was very difficult. I'm glad that's in here. One second. So yeah, these are 5-year life, 50,000. So this is all making sense. 200,000. Here we got update terminal value for sure. This and then taxes, all that's got to be updated. All right, what else is broken on here? Let's see what happens if we say the end year is 2027. Well, annual detail doesn't stop, so what we have to do is say if this is greater than our end year, then 0. Okay, and then this is dynamic variable, so that's automatically updated. That's fine. This is fine. Debt service is fine. This just pays it back. Now, what if we had no terminal value? We don't include that. See, this still needs to stop. So put this in here as well. Okay, perfect. So that's working. We need to do a terminal value. So this is going to be based on end year. So there's no index. So we want to index EBITDA, which is 28. Actually, go to the income statement. Income statement. I should also draw 28. That's kind of coincidental. So index if terminal value D3 and then income statement annual is on 5. Okay, so what are we missing here? That's a date. This is a number. This is a number. So I need to take, oh wait, no, D3, that's a date as well. So this January 2027, this should equal this. True. All right. Oh, include terminal value? No. So let me put that back to yes. So this final year EBITDA, 42,120. Nice. So we're matched numbers there. That's good. So 42,000. EBITDA multiple 2x. So you're selling for 84. Applying, let's say, what if 80% applied to the extraordinary income? The other 20 goes to fixed assets. Let's look at the CapEx schedule. Okay, so this is saying book value is the value at sale is less than the remaining depreciation by a lot. Let's see if this makes sense. So we held for to 2027, started at 200,000. We depreciated all of it, so that should be 0. Oh, everything's fully depreciated. Hold on, let's go. Let's pick a earlier year. Just make sure this logic's working. Okay. So depreciation is ending before the actual end of operations. Why are we getting a negative 193? Let's say if these are 10. So this is right. 120. Let's see. HLOOKUP, global control. Oh, balance sheet. Okay. So we haven't updated these formulas yet, so this could be a potential reason why. Hold on, hold on. So saying they're just, this is the book value. This is how much is being applied. Oh, because the exit value is only 84,000. Let's say, hold on, let's increase this up a bit. Let's say uh, let's say you did 100 sales a day, 150, 250, and your prices are a bit higher, 15, 18, 25. I just want to see some bigger numbers here just to make sure it's making sense. Oh, so 400,000. Now let's look here. Okay, and you're applying 20%. Let's lower this. Food truck, maybe it's 80,000. It's maybe more reasonable. Okay. Point is, whatever amount of the terminal value applied to here, it'll go against the value at sale against the, let's see, what the heck did I do here? If goes no, then 0. So it's taking just value at sale minus the book value. Book value is just based on the initial cost. Value at sale is multiplying the relative portion of each, I guess the total going to here, to all this. So there's 270. or there's 195 plus the sale building. Let's say it's 50. Okay. So this 467 500 is coming from right here. 487.5. Now what I'm confused on is how is this value higher? Ah, no, that's right, that's right. It's taking the total, so whatever you're applying to it, and then this is the cost basis. So this is separate, and then this here, so 487.5 is there's where that number is coming from. So this 487.5, we're saying the total business is selling for 975,000. 487.5 goes to here, and that's measured against the book value to get net gain or loss. This is top row is separate sales basis, and then the value is whatever is over here. So that's a separate gain or loss. Then the remaining amount will go into this here. And so 467.5 is the net gain or loss, and that's because the total value less this. Okay, that makes sense. Now, if we didn't want to apply anything to CapEx, we're saying all this is just worthless. We could, or not applicable, we just go 100% and then nothing. And then it's saying you basically have a full loss on whatever. Now, hold on, what did I do in this one? It's the same logic. Accumulated depreciation. Hold on. Okay, this is, I knew there was some reason why we were off. So we need a year of operation. Uh, and we don't have it here. So we could do years of operation. Everything's going to be the same because it's all right up front. It's just end year minus year of this. So 2021, 2, 3, 4, 5, 6. So it should be 6. Oh, and wait, what? Hold on. Let's just do it here. So total time this minus this plus 1. 6 years. And then now let's see if we get making sense here. So operating 6 years. Okay, and put this back. See, I don't normally do the annual only. That's why it's a little bit different. Let's say we have 60%. So there's the 390, which is coming right from there. Now the book value now, okay. Now we're making book value is not the value of the cost, and I didn't think so. That's why I was confused when I was saying it. Book value is the total cost less depreciation. And gain or loss on sale is based on the difference of those two. Okay, this makes more sense. That's fine. So like for this one, 80,000. Depreciation's here, but we ended earlier. There's 195,000 left or applied to it at the sale. 32,000 depreciation, or 32,000 is the remaining amount that can be depreciated. Which if we divide that by this, it's 48 months. And that makes sense because we're ending, what, in year 6? Yeah, 6 years, and it's a 10-year model. All right, so that math checks out. So this is good. Startup costs is referenced C15. Yep. All right, depreciation's fine. This is fine. So that's good. We got a terminal value in here that makes sense. Cap table we're gonna have to reference in. We'll have to do all this. So tomorrow, bigger day tomorrow, I'll get the cash flow statement updated, the balance sheet updated, then we'll update the annual detail with all the new stuff. Then we'll update the executive summary with relevant data, the distributions, and cap table, and we'll do all the sanity checks down here. We'll start messing with assumptions to make sure everything always works. And then we'll be done. All right, guys, that's all I got for you today. We'll finish this up tomorrow for sure. Food truck model. Don't forget to subscribe, like the video. Most importantly, check out smarthelping.com. Again, financial models tab at the top. We got bulk discounts here, or you can buy everything on the site for $9.99. Hundreds of templates, all unique, logic.